Hello and welcome to the Weekly Market Metrics. I'm your host Sandeep Rao and we are in week 31 of 2026. I want to start with what's been happening in South Korea since last week. Their market, the Kospi, slid 3 straight days down close to 17%, a sell-off that wiped hundreds and billions of dollars off its value, then came back roaring 18% from the lows on Friday. The trigger? Well, strong numbers from Amazon and Microsoft revived optimism about the billions being poured into artificial intelligence. And chip makers SK Hynix and Samsung both shot up around 30 and 28% in a single session. This is a market that has more than doubled this year and has been halted repeatedly by circuit breakers. One can only imagine what the retail traders and investors over there must be going through. Elsewhere, the world got a tad bit peaceful, hopefully. President Trump announced a deal for Hamas to disarm and Israel to withdraw from Gaza. The caveat, as with all things Trump, is that neither side has confirmed it and the timeline stretched for close to a year. Closer home, the news is rather somber. Assam's floods have now claimed 80 lives with over 2.12 lakh people affected across 8 districts. A reminder that the biggest stories of the week don't have to show up on the tickers. Back to our markets, well, Nifty closed the week in the green, up 2.6%, and this is our month-end episode, so we'll also dig into the monthly seasonality. Plenty on the table this week, so let's get into it. Starting with the rate of change across indexes. Let's begin with the headline indexes. Well, it was a positive week across the board with all headline indexes ending higher. Nifty 50 and Nifty Next 50 led the way, both gaining 2.6%, while Nifty Mid-Cap 150, Small Cap 250 and Micro Cap 250 also ended the week in the green. Looking beyond the week, the picture remains positive across all time frames. On 1 month basis, all the headline indexes are in the green. The same is true over the last 3 months, even on a 6-month basis. All the broader market indexes remain positive, with Microcap 250 leading the pack over 20%. Nifty 50 is the only headline index still in the red over the last 6 months. The ROC chart from the weekly market metric sheet is now on the screen, and looking at that, well, the headline indexes Nifty 50 and Sensex were the top performers this week, gaining 2.6% each. Mid-Select also had a strong week, raising 2.4%, while Bank Nifty lagged a bit at just about 1%. On a YTD basis, the broader market continues to outperform. Mid-Select remains the only index in the positive territory, up 7%, while Nifty 50 and Sensex continue to be the weakest performers, still down nearly 7 and 8% each. If we look at the year-to-date column, the gap between Nifty and the broader market has narrowed a bit this week, thanks to Nifty outperforming most of the other headline indexes. But still, Nifty remains down nearly 7% for the year, while all the broader market indexes trade in positive territory. Microcap 250 is leading with gains of over 11%, followed by Small Cap 250, Mid-Select and Nifty Next 50. So 2026 so far, it's all been about the broader market, which continues to hold on to its lead. If you remember last week, we mentioned that Nifty was on track for the weakest performance at the end of July since 2011. Well, this week, the rally changed that, with the index trimming its year-to-date losses to around 6.7% by the end of July 2026. Now, let's look at Nifty's monthly seasonality. July 2026 finished in the green with a gain of 2.17%, extending the recovery that began in June. However, despite 2 consecutive positive months, Nifty is still down 6.7% for the year. Historically, August has been a positive month, although not as strong as July. If you look at it over the last 26 years, August has finished higher in 16 years, giving it a 61.5% win rate. The average return has been around 1.25%. And if we look at the recent history, August has delivered positive returns in 4 out of last 6 years, with 23 and 25 being the exceptions. It'll be interesting to see if August can continue the recovery and help Nifty reduce its YTD losses further. At least that's what I'm expecting. Moving on to the weekly chart, Nifty staged a solid recovery after last week's weakness. The index gained over 600 points during the week, reclaiming the 24,200 level and closing at 24,384. This is also Nifty's highest weekly close in 21 weeks, or nearly 5 months, with the last higher weekly close recorded during week 10 of 2026, that is in March. More importantly, Nifty has moved up above the 23,800 support zone that it had lost last week. That breakdown, in hindsight now, looks like a false move with buyers stepping in quickly. Going into the next week, 24,600 remains the first major resistance to watch out for. On the downside, 23,800 once again becomes an important support, followed by 23,200 to 23,000 zone if selling pressure returns. From a moving average perspective, the picture has improved. Nifty has reclaimed both 10-week and 20-week moving averages after briefly slipping below them last week. The 10-week SMA has once again moved above the 20-week SMA, a positive sign for the short-term trend. However, the 40-week SMA near 24,700 continues to act as a key long-term resistance. Volatility seems to have cooled off this week, with the weekly trading range narrowing from nearly 660 points last week to around 540 points this week. Monday was the quietest session with a daily range of just about 120 points, followed by Tuesday at just about 87 points. Thursday recorded the widest range at around 156 points, which is about 0.65% of the current Nifty spot. The 5-day average daily range also declined further to 128 points from 173 points last week, and it sits below the 10-day average of 150 points. Now, if we look at Nifty on a daily time frame, the picture here has improved significantly compared to last week. After 5 consecutive red candles last week, Nifty bounced back with 4 green closes out of 5 this week. The index also opened with gap ups on Monday, Wednesday, and Friday. Nifty actually reclaimed the 24,000 levels on Monday itself early and continued to build on those gains, closing the week at 24,384. The next resistance comes in at around 24,470, followed by the important 24,600 zone. On the downside, 24,150 to 24,200 become the first support levels to watch, followed by 24,000. Any break below those levels could bring back the infamous 23,800 back into focus. From a moving average perspective, the picture again has improved considerably. Nifty has now reclaimed the 21-day, 50-day and 100-day moving averages, all of which are clustered between 24,000 and 24,150. The next hurdle for the bulls is the 200-day moving average, which is currently placed around 24,780. Until then, the 21-day, 50-day and 100-day moving averages should act as the first support zones on any pullback. Following up on last week's observation, yes, we are still stuck in the same 1,500 point range. The good news is we are now much closer to the upper end of the range rather than the lower end. Now let's zoom back in and move to Nifty's hourly charts. Now, if you look at the hourly chart, Nifty spent Monday and Tuesday chopping around the 50 EMA without any clear direction. The trend turned decisively bullish after Wednesday's gap-up opening, with the index staying above the 50 EMA for the rest of the week. As long as Nifty continues to hold above the 50 EMA, the short-term momentum remains with the bulls. Now, talking about Nifty monthly expiry, which happened on Tuesday, July 28th, well, it turned out to be surprisingly calm. The at-the-money straddle opened below 100 points and the index ended up trading in a range of just about 87 points for the entire day. Such a quiet expiry caught many traders by surprise, because selling a delta-neutral straddle with a premium of less than 100 points and expecting the market to move even less isn't something that you get to see very often. Yet, that's exactly what happened. But whatever calmness we saw on Nifty expiry was completely absent on Thursday's Sensex monthly expiry. The at-the-money straddle opened at around 320 points, while the index ended up trading in a solid range of 566 points. The real action came in the final minutes of trading. The 77,900 call, which was trading at around just 1 rupee, spiked to nearly 50 rupees before settling at around 28 at the close. Wild moves in the last hour of the expiry aren't unusual. What made this different was that most of the action happened in just the last 10 minutes. This could be a classic example of gaming the VWAP-based closing price mechanism before it is replaced by the closing auction system CAS from next week. I personally plan to observe CAS for at least a week before sharing my thoughts. We need some data before we make any sense of it. I'll perhaps make a dedicated video explaining how it has changed closing and its impact on expiry day trading. In the meantime, if you would like to understand how CAS works, you can watch our earlier video on the topic. Before we wrap up the charts, here's something interesting I saw on Nifty. As they say, if you keep staring at the charts, you'll definitely find something. Okay, that was a joke. You see, for almost 2 years now, Nifty has gone virtually nowhere. Despite all the rallies, corrections and headlines, the index is trading at almost the same level it was around 2 years ago. Now, knowing me, I won't let such observation just be, so I looked up what happens after 2 years of no returns. Now, if you look at the history, these long periods of flat returns have been surprisingly rare. That's my first take. But what's even more interesting is what happens after them. In every similar instance over the last 25 years, Nifty delivered positive returns over the following 1, 3 and 5 years, often very strong returns. Of course, past never guarantees the future, but it does suggest that long periods of consolidation have often been followed by meaningful trends. The only question now is whether this time will be any different. I'm hoping for history to repeat itself, and let's see what happens. Fingers crossed. Moving on to what to expect in the coming week. Well, looking ahead, all eyes will be on 24,600 level. A decisive close above it could finally signal a breakout from the 4-month range. On the downside, 24,000, 24,150 is the first support zone, followed by 23,800. The short-term trend at the moment is bullish, but the real test for the bulls begins right here. Now, if I look at the straddle premiums to figure out the range for the upcoming expiry, which is on August 4th, Tuesday, Nifty's at-the-money straddle is at the moment trading at around 167 points, implying the expected move of just about 0.69% from the current level. Based on that, the expected range for Tuesday's weekly expiry is roughly 24,217 on the downside and 24,551 on the upside. Moving on to India VIX, well, remember how we spoke about India VIX moving higher for 3 straight weeks? Well, this week it did a complete U-turn. VIX dropped 16% to close at 11.76, indicating that traders and speculators are once again expecting a relatively quiet market. Moving on to the sectoral performance, the leadership changed completely this week. If you remember last week, defensive sectors like FMCG and CPSE topped the charts in what was otherwise a fairly muted week. This time, the rally was much broader, with cyclical sectors taking charge. Nifty IT emerged as the best performing sectors, gaining 6.75%, followed by media at 5.97% and auto at 5.61%. Nifty Pharma and Nifty Consumption also delivered strong gains of 3.86% and 3.26% each. Interestingly, Nifty Auto is the only sector that has featured among the top performers for the 2 consecutive weeks, while IT made a strong comeback after staying out of the top 5 last week. Overall, the sectoral participation was much broader than what we saw a week ago, which again I think is an encouraging sign for the market. Moving on to the TJI sector baskets, as it's the month end, I would focus on the top baskets this month. It mirrors the Nifty sectoral indexes a bit. IT is on the top, specifically large cap IT is up a striking 20.1% for the month. Mid cap IT is close behind at 8.1%, but look at one column across and you will see large cap IT is still down about 19% over 6 months and sits 22% below its year's high. The Nifty IT index actually touched the 52-week low on the 1st of July before rebounding, helped by a reasonable June quarter earnings season and maybe because of the money rotating into IT services as investors backed off from the global AI and chip sell-off. The auto OEM folks are up 10.6% for the month, and green all the way out to 5 years are riding a record June sales, the best June the industry has ever had, and a strong set of first quarter results. Electronics manufacturing EMS, something we have highlighted in the past as well, is up 8.6% thanks to the manufacturing push from the center. Lastly, the jewelry basket is up 8.1%, which is running on a resilient wedding season demand, firm gold prices, and the slow migration of buyers from corner goldsmiths to branded chains. As I've said in the past, if any of these baskets interests you, do double click and you will see some real gems and consistent performers. That's all in sectors this week. Moving on to commodities, precious metals specifically, both gold and silver had another subdued week. Gold continued to trade below its 50-day moving average and remained stuck in a narrow range after the sharp correction seen over the past few months. Silver also struggled to gain momentum, with every bounce facing selling pressure near the 50-day moving average. Both gold and silver have now been trading below their respective 50-day EMAs for close to 8 weeks, showing that the trend continues to remain quite weak. So in summary, the market has bounced back strongly after last week's weakness, but the bigger picture hasn't really changed much. Nifty continues to trade within the same 1500 range that had contained the market for almost 4 months. And if you zoom out even further, the index has delivered almost no returns over the last 2 years despite all the rallies, corrections, and headlines in between. Though I must say the short-term trend and sentiment has certainly improved, but the bigger question remains the same. Will this finally be a breakout or just another move within the same range? That's what we'll be watching out for in the coming week. Moving on to what caught my attention this week, I've got 2 short picks for you. Now, since South Korean market is all over the news, I think it's worth understanding why. So I have this Straits Times piece on why Korean stock market has become more volatile than Bitcoin. The gist? Well, 2 companies, Samsung and SK Hynix, now make up for more than half the index, so a fund tracking the market has in a way become one big bet on AI. Volatility apparently has topped 60%, but when the whole market rests on just 2 names, what do you expect? But do read the article, there is much more to it. My second recommendation for the week is again something which is all over the news, but it's of a different kind. With Christopher Nolan's Odyssey now in the theaters, and whether or not you plan to watch it, here's a 5-minute TED animation that explains what the story is actually about. Now, Homer's epic, which actually runs into 24 books, is being reduced to a 5-minute video. Cannot get more ironical, right? But who knows, this 5-minute video may actually be the thing which may make you watch the film. As always, the links are in the show notes. Now over to the events to factor in for the coming week. Well, it's going to be the first week of a new month, and it'll be interesting to see how the market sets the tone for August. It'll also be the first week that the closing auction system CAS will be used to determine the closing price instead of the VWAP based mechanism. It'll be interesting to see how the new system behaves in live markets. The biggest event on the calendar is the RBI's monetary policy decision scheduled for Wednesday, August 5 at around 10 am. Apart from that, it's a relatively quiet week on the domestic macro front with no major event schedule. So yes, all eyes will be on RBI's decision and the commentary for cues on the market's next move. So yes, that's pretty much it for the week, and if you find the series useful, don't forget to subscribe to the channel, and yes, do share it with your friends. Until then, stay curious, stay steady, and enjoy your weekend.